time now for the ETF report. Our next guest says broad commodities can help with inflation and geopolitical shocks, and gold remains the classic monetary hedge and portfolio stabilizer. So joining me now with 3 ETFs in commodities is Mike Philbrick, CEO at Resolve Asset Management. It's good to have you. Thanks so much for joining us.
Good morning, Lindsay. Great to be here.
So before we get to your actual ETF picks, I want to talk to you about gold, because obviously gold prices have been seeing some whiplash over the last couple of weeks because of what's been happening in the Middle East. You remain bullish, though. Why is that?
Well, I think that gold and the global economy still faces all of the trials and tribulations it did back in January. You've got central banks that are now going to have to face the dilemma of keeping rates a little bit higher to fight inflation, and that degradates the traditional bond diversification opportunity, which leaves you with gold as a diversifier. And that diversification impact is coming from the fact that we've got some sustained inflation, some supply disruptions, and geopolitical stress, which all lead back to gold. And remember when we chatted in January, when we were having that big spike, I did mention that, if you've been in it, great. You might want to sell a little and rebalance, but look for some sort of pullback, because most people and most investors don't have a position in gold. And this pullback represents an opportunity to start to build in that diversification for portfolios.
Interesting. Obviously, we've seen oil. The price has been under pressure because of what we've been seeing in the Middle East. Basically, everything we're seeing right now seems to have some connection with that war in Iran. What do you think is going to happen with the price of oil? Look how much it's spiked ever since the beginning of March. Do we really think it can get back to the levels it was at before the conflict began?
I don't think so. I mean, we've got a war-driven inflation shock that is really kind of rewriting the playbook on diversification and portfolios, much like the 70s. And so the idea that we're going to return to $55 oil might be a little bit optimistic. Possible, of course, but optimistic. And I think we've got to work through the disruption that we have currently, and that's accounting for, at the moment, 2% of global GDP. So it's not small, but we are working through that. And you're seeing in the price of both stocks and oil, it looks like the markets are anticipating some sort of resolution. And that's probably because it is very untenable on both sides of the negotiations for this to get worse. And so that drives a little bit more urgency to the negotiations.
But obviously, how long these negotiations take, if they are in fact happening, would affect the outcome in terms of what we see in the markets. Is that right? Like, the longer this conflict goes on.
Absolutely.
Yeah.
Absolutely. The longer it goes on, the more dire it gets. I mean, oil is oil, and energy. Hydrocarbons are in everything. They're in your food. They're in your plastics. They're in the car you drive, and so on. So they're very important to the global economy.
Okay, let's get to your ETF picks now. Your first one is a BMO Broad Commodities ETF. What is it that you like about this one?
Yeah, ZCOM, or ZCOM, I guess. Basically, this is a diversified, broad-based commodity ETF that gives you exposure to everything from the energy side, agricultural commodities, and precious metals. And why it fits now is that, in a current macro shock like we're experiencing, where you have it being more about inflation than it is recession, commodities are one of the few places investors can look to get direct exposure to those rising input costs. The supply disruptions, the geopolitical stress, all cause these commodities to rise in price. And this is the cleanest way to express that view and keep it clean in the portfolio. Now, you have to keep in mind commodity returns can be cyclical and volatile as well. So it is a part of the portfolio that can diversify those stocks and bonds, because if we enter a 1970s-like environment, stocks and bonds become correlated. They go down together, like 2022. But what often happens is if you have inflationary pressures, those commodities do go up in price, and that helps the portfolio be more stable.
Interesting. Okay, and as we continue this conversation, particularly about gold, your next pick is CI Gold Bullion Fund.
Yeah, that's Vault, V-A-L-T. And again, this is a physical gold exposure through an ETF. We've talked about this for probably 3 or 4 years. Gold remains the classic hedge against that monetary instability, geopolitical stress, and the declining confidence in traditional policy anchors, if you will. So this is providing a real piece of diversification beyond just your stocks and bonds. And with Vault, The nice thing here is the management expense ratio is around 17 basis points. So it's probably the cheapest one in Canada that can be bought. So nice, cheap, cheerful, and exposure to that bullion in your portfolio to provide better diversification.
And something that really hasn't been talked about as much as gold recently is silver, which has been seeing its own shares of volatility, I guess you could say, ever since this war broke out. But that's your last pick, is iShares Silver Bullion ETF. So what is it that you like about this one?
Correct. So SVR/C, and that's the physical exposure to silver in an ETF format. And so silver is a precious metal like gold. And why that fits is because it has both a monetary metal aspect to it, as well as that industrial demand story, which we're talking about the electrification, infrastructure spend, and hard asset scarcity and build out that's going to be required in an AI world. And so silver gives you a little bit more volatility than gold, and it can behave a little bit more like a risk asset. So during growth scares, it can come off a little bit. But just as we talked about back in January, there was this big run in silver and gold. And we said, well, maybe pause, but do keep an eye on these assets for some sort of pullback where you can start to build your position. Crawl, walk, run. If you have 0 in your portfolio, it's time to probably get some precious metals and commodities in your portfolio. If you've got some and it's come down in price, well, rebalance and add back up to your allocation.
I just want to get your thoughts on silver in general, though. Like, is it smart to treat it kind of as people treat gold, as a kind of safe haven, a place to go when things are looking a little bit uncertain, or is it not quite as safe as gold?
It's not quite as safe as gold. Silver has this dual personality. It's a little bit of a monetary metal, sort of that store of value, but it also has a large slant towards industrial demand and that story that's coming from electrification, the story that's coming from the infrastructure build out. It's used in power, it's used in computer components and all of that sort of thing. So the demand side is quite strong, as well as it being a monetary metal. That's going to give it more oomph, more beta. So it's going to be a little bit more wild than gold, but you're going to reflect that in your position size. So if your position size of gold was 10%, maybe your position size in silver is 5%. So you're going to want to reflect that position size to account for the higher volatility that silver brings to the table. But it brings that dual mandate. It's kind of got that commodity side to it where it responds to industrial demand, but it's also got that monetary side where it behaves a little bit like a store of value as well.
Interesting. Okay, Mike Philbrick, CEO at Resolve Asset Management. Always good to get your insight. Thanks so much for joining us. Appreciate it.